Hello everyone, welcome back to Upside Down Data. Today I want to talk about why I am very cautious short term for Bitcoin. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter, where we put out regular updates about our risk indicators and more. So I want to show some indicators that we watch here on the channel that, in my opinion, are showing reasons for concern or for caution in the short term for Bitcoin. So again, this is going to be focused more on the short term. I'm long term much more optimistic about Bitcoin's potential, assuming that there's no stock market crash or anything like that. But this is going to be focused on the short term, where I see things maybe being more likely to play out based on some indicators that we have here at the channel. So the indicator I want to start with is our trend confidence indicator. If you're not familiar with this indicator, essentially what it's capturing is basically how confident we can be in a given uptrend or a downtrend, or if a given downtrend or uptrend is likely to be petering out and maybe reversing sometime in the not too distant future. So it's an indicator that's intended to be a leading indicator as much as possible, give us as much advanced warning as we can get that a current trend maybe is losing steam. And I'm zooming into more recent price action here, so really showing the kind of the tail end of the parabolic run into early 21, and then the kind of that rounded top we had. And I think this shows how this indicator can kind of act as a leading indicator of both a turn to the downside and a turn to the upside, because you can see that in the spring or winter and spring of 21, you can see that as we kind of went up in price, the trend confidence indicator went lower and lower and then was fully in the red by the time we got to the actual all-time high here in April. So the all-time high, you see, it didn't even flip green when we got up there, suggesting that there was very little confidence this indicator was placing in this trend. It was basically doubting the trend. It was saying this is not what this uptrend should look like if it's going to be able to continue, and indeed it didn't. It ended up crashing down here. But then at the same token, what it did then, looking at the summer price action, is it said, well, wait a minute, this doesn't look very convincing either for an extended period of time, and it started actually flipping bullish, and it actually then got up to being bullish and stayed up there well before we actually hit that bottom, and then we went up, acting kind of as this warning sign, this leading indicator saying, hey, pay attention, this current trend might not be doing so well. And indeed, then we ended up shooting up to the upside, putting in a new all-time high after a little bit. So what is going on right now with the TCI? And this is what's currently giving me concern. So I had put out a video more recently where I had talked about this. The TCI, flipped bullish right here at that 11% candle day that we had on Bitcoin that shot up. That gave a lot of people hope that maybe we were able to at least put in a reasonable relief rally after this really oppressive downtrend that we've been in for months at this point, ever since, really pretty much ever since the all-time high here, just been almost nothing but down, with only just slight moves back to the upside. And so the TCI did recognize that as it was brewing, and then sure enough, we had that nice move to the upside. I think Bitcoin got rallied over 30% kind of from bottom to top there. And at the time, I mentioned that maybe would be as much upside as we get out of this current trend. There's no guarantee it was going to continue, but certainly it was a hopeful sign. But more recent price action we've now been moving down, and the TCI is getting less and less confident that this really is going to be a sustainable uptrend here. Now you'll notice it still is in the green zone, right? We haven't dipped quite into the red zone, but we are dancing on a fine line right now. So the critical level that the TCI is looking at, so with the TCI you can basically get the algorithm to tell you what it's looking at as being kind of the critical price between bullishness and bearishness. So as I record, it's a little under 37K. Don't take this number too seriously. Really, the TCI is meant to be a continuum, kind of this relative confidence of bullishness or bearishness. So really, the exact level here isn't super important. Right as I was recording, we're trading just above this. This could be different by the time you're watching it. But again, this exact number isn't totally critical. It's more just kind of generally the 36 to 37K range is what it's watching. And so really, if we lose this area, and especially if we lose it definitively, if we get a close down there, and if we stay down at those levels, that's when I would be especially concerned in the short term, because looking at just recent history, it's always been a pretty bad sign when the TCI has gotten at all extended down below zero. A further downside is actually followed every single time that has happened so far. We can start just by looking over here. We got this initial close down here into the red, got more downside before moving back up. here, closed down into the red, got more downside before we moved back up. Again, closed down red all the way up here, more downside before moving back up. You know, this was technically green and red. I'm not really going to count that because that's basically at zero. It doesn't, I don't think that really counts all that much. But again, green, and then we closed down red, and then, of course, much more downside that came in the summer. Green, red, right here, downside that came. Green, flipping into red all the way up here. Of course, a lot of red down there. So that's why I would be very concerned if we close at a point that's not just on zero. If it's on zero, I don't see that as being very definitive. But if we close kind of decidedly below zero, recently speaking, you know, in recent history, that's always preceded more downside. And so if that were to happen, I would think it would be likely that we'd at the very least go down and retest 33K, if not having to go down and test 29K, should we decisively close below this level if these historical patterns play out again. Now, of course, there's no guarantee that history will play out again. You know, it could be that we get kind of an anomaly where we do close down here and then we shoot off to the upside in a kind of a relief rally. But just based on what we've seen with this indicator in the past, usually decisive closes below this critical midpoint, this critical value, have not been good. They have not been bullish, and usually further downside comes. Now, it's of course an open question how much of that downside we realize. You know, if we only have to go back to 33K, or if further downside would have to follow. But I would definitely expect, personally, more downside to come if that were to happen. Now, of course, that's not financial advice. You should make your own plans for what to do if different things happen, you know, make your own decisions. But that's just what I would personally be expecting, that if we decisively close red here, so if you see the price closing, going down to, you know, breaking below 36K especially, or 35K, then that, in my opinion, would be quite bearish, and in the short term might suggest that we have to revisit some of these lower levels. So this is the first piece of data that I'm looking at that's making me cautious in the short term. The fact that we're dancing on this line so closely is concerning, just given the fact that when we lose this line in the past, it tends to be bad for Bitcoin's price. Let's look at another indicator that's also giving some relevant data here. So this is the momentum bias indicator. So this is not the TCI, not the trend confidence indicator, though I do have it depicted in a similar way, right? So just like with the TCI, with the MBI, things above zero are bullish, things below zero are bearish, hence green above, red below. The way that you can, the data that this is trying to capture, the concept that the MBI is trying to capture is basically momentum in the market. So when you're above zero, that suggests a kind of positive momentum bias. That means that momentum to the upside is kind of the prevailing force, and it tends to override any short-term downside momentum that might come into the market. So it's kind of this overall bias to the upside. Red is the opposite, bias to the downside. And zero is the average. So this is the average amount of kind of momentum bias that's been in Bitcoin, which obviously has been positive given this, you know, logarithmic price curve going up. And then the other values here are standard deviations. So, you know, one standard deviation above the mean, one standard deviation below the mean. That's how you can interpret this output. So with the MBI, what you really want to be seeing if you're going to be in a bull market, and especially going into a big parabolic run, is spending a lot more time in the green than in the red, right? Really, the way these runs kind of tend to work is this kind of oscillation that becomes more and more kind of biased to the green side, and then you just build up to the inevitable peak, hanging out exclusively in the green zone. You know, we saw that again here coming out of the March 2020 crash, kind of just equal oscillation around zero, then off to the races we went into this parabolic run up here. But what you want to be worried about is these kind of bearish divergences, or when momentum seems to be bleeding out, and especially when you're starting to spend a ton of time down in the red zone. Because when we do that, we can see historically that's tended to be corresponding to kind of bearish times, these bear market periods for Bitcoin. This kind of these points where negative momentum is dragging the price down along with it. And that's what's really, I think, concerning right now on this chart for Bitcoin. If we look at this, where, you know, we went down to have a really strong negative momentum bias coming into the summer, but then we kind of got this bullish divergence that as price was going down, the momentum bias, it was coming up, still negative, but it was rising up, and then we shot up into the green zone, and then kind of started doing this equal oscillation that at the time was looking hopeful that maybe we could continue that to make the next leg up in the bull run. Obviously that didn't materialize here. The negative momentum ended up prevailing, and we got stuck down here like we have in past bear markets. And one thing that's unfortunate here is that we can see the momentum bias is again shifting back to the downside, right? One of the things that had been hopeful with that recent kind of rally that we had going back up into the mid 40Ks was that it really had been giving some relief on this negative momentum bias, with the hope that maybe we even would have been able to crack above zero and maybe start reestablishing a more bullish structure on this indicator. But that's kind of broken down, that we've gotten rejected below before even making it to zero. And it seems like we're going to have to spend more time in this negative momentum regime where, by and large, moves to the upside just quickly get swatted down and moved back to the downside. So one of the things that I'm going to be watching for with this indicator is just, can we at least start setting in higher lows here? Because ideally that would be one suggestion, maybe, that the negative momentum is starting to leave the space. You know, like in this run here, we're kind of getting this consistent lower lows before getting higher highs. Or in this bear market here, you know, this was the lowest low actually coming right off the top, the most negative momentum. Then we got that lower low in the bottom of the bear market. So what I would like to see, if this is going to be a local bottom, I'd like to see us not break this again. I'd like to see this form a higher low, which might suggest that we're kind of starting to get to a point where maybe we're going to be able to just methodically move back up to more even pastures, and then hopefully eventually reestablish bullish momentum. But short term, this is not bullish, right? You know, this is not a great thing to be moving back down here. Another reason why I'm short term cautious is just so far nothing has been able to break us out of this kind of regime of negative momentum bias. So the final piece of evidence that I want to talk about is actually the short-term UDPI, or upside downside potential indicator. So this is our risk indicator here at the channel. We have 3 different versions we monitor for all the different assets that we're monitoring. We have a short-term, a medium-term, and a long-term. So the short-term, as its name suggests, cares about more short-term volatility, so things that play out over days to weeks. So you'll see that it kind of oscillates a lot more with kind of the intra are very much more short-term volatility, whereas the longer-term UDPI, the long-term UDPI, is much more just kind of, you know, general green here and then red here, you know, going down to green here. It's not caring about this kind of shorter-term volatility like the short-term UDPI is. But one of the things that's useful about the short-term UDPI is, again, sometimes give us a little bit more information about what might be expected over shorter time frames, right? And we can especially see this actually coming up to this all-time high we had here. You can actually see this little bit of red that showed up there, which at the time is actually a bit of a warning sign for where we were, suggesting at least in the short term then we're getting overextended, which ended up leading to not only short-term downside, but unfortunately more long-term downside that's been following. So here I'm just showing you the raw output of the UDPI across time. So this is that point I was just talking about here. And then we had dipped down into kind of the negative zone on the short-term UDPI, suggesting that some kind of, you know, relief was expected. You know, this was was you know, right before the New Year's. This was coming into that kind of Christmas type of upside that this had kind of bottomed out, and we saw that kind of a little bit of a rally that ended up petering out, not really going anywhere. But then this was kind of that that bottom in January that led then into this rally that we just got. But one of the things with being in this kind of more bearish conditions is that even just getting to a score of around 1 is maybe about as extended as you can hope to get on the short-term UDPI before rejection is likely. You can look back at history and see this play out, right? That really the only times that you tend to break above about a 1 on the short-term UDPI is these bigger rallies, right? Like the mid-cycle top in 2013 and then the market cycle top. These kind of moves leading into the big run in 2017. And then we had gotten over it a bit in the bear market, but again, we got rejected shortly after, you know, didn't make it to 2 each of these times before getting rejected back to the downside. And in even in 2019, we weren't even able to break 2. So really, this 1 level, you saw it again actually coming out of the March 2020 crash. We got rejected off that. Price had to move back down a bit before moving up. Just generally speaking, this kind of 1 to 2 range tends to act as a lot of resistance in bearish conditions. And so in a lot of ways, you're kind of having to hope for a lot to really be able to decisively break out of it. When you do, it's almost sometimes can be kind of bullish, like we did coming out of the summer, where coming from these extreme negative values all the way up to here, you know, then we actually ended up putting in more upside, or like here, coming up to put in that January top before then putting in the next top up as well. That's actually on the short-term UDPI is not always a bad thing to decisively break into this new range, although sometimes that does mark the absolute top. But just, yeah, essentially getting up there, it was not surprising me at all when I saw Bitcoin start to correct from this perspective, because, you know, really it would have been in some ways bullish to make it further, because really this has tended to act as a lot of resistance. And so here we went. back down to the downside. Now, obviously, we have to just wait and see what happens. And again, like the MBI, I would also like to see the short-term UDPI form a higher low here, because that tends to be kind of a bullish structure, right? You see that in prior kind of runs up, where if you're putting in higher lows on risk, then that actually tends to be a bullish structure. You can even say the March 2020 crash being the lowest on the short-term UDPI, put in a higher low in the summer. I'd like to keep a higher low than that, before we can move back up, to maintain, some hope that we're not going to go into a super protracted bear market. If we see this break down below the summer low here, that would be very concerning, in my opinion. Suggest a more prolonged bear market might be in the offing. Now, that's looking more far out. Again, with the main focus of this video talking about the short term, this was a sign for caution. Started to realize this downside potential, and I think there could just be more to realize, but I would be looking for it to start reversing somewhere in this region for it to maybe be more of a hopeful sign that we can start then putting moves back to the upside. But we're just going to have to wait and see what happens. And so really, these are the main things that I'm looking at right now, that or three of the things that I'm looking at that are making me cautious in the short term. The fact that the TCI is looking precarious, that we're almost flipping into the bearish stance, and every time we've done that recently, downside has followed. The fact that we're stuck in this negative momentum bias kind of world right now, that we just haven't been able to get a meaningful rally to start breaking that oppressive kind of dominance of the negative momentum, that's also concerning. And then finally, on the short-term UDPI, we were, according to it, getting a bit overextended, and so it's certainly plausible that we'd realize some of this downside potential it thinks is realistic before being able to maybe find a bottom and moving back up to start realizing some of this upside potential. So we're gonna have to wait and see. Obviously in the short term, anything can happen, so we're just gonna have to see what ends up happening. Bitcoin could surprise us all, go in a big rally tomorrow. Anything could happen. But these are reasons why I am being very cautious, and why I'm not just expecting Bitcoin to go on a big relief rally immediately. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. And remember, with the UDPI and the TCI and the MBI, we're all gonna make it.